Hi guys, thanks for tuning in to another episode of Nuggets News, or our weekly crypto news update with our head of written research, Michael. How are you, Michael?
Good. How are you?
Pretty good. Another wild week in global markets and weakness in crypto markets, but we've still got plenty of exciting news and things happening. So, how do you see it all?
Yeah, well, let's just jump straight in. I'll share screen and sort of start covering off what we think here. I think the main thing, I guess, that we've been writing about and that a lot of the audience should be aware of is that what we're seeing in the weakness in the crypto market is not a crypto specific thing. This is just general markets. We see that April the 2nd is what is being called Liberation Day because it's tariffs galore, apparently. And we don't know the extent about what this is going to be, if there's going to be just a doubling down in tariffs or if there's going to be, the last minute, they're going to pull the old switcheroo and carve out all these concessions for certain people. But this could go either way. Like markets could rip if it's Trump, is all talk.
Yeah.
Markets could crash if he's going to try and double down. So effectively coming into Wednesday that it is yeah, be ready for volatility in either direction because who knows what happens here. Um,
Yeah, for sure. I think that ties in with some other stuff we want to talk about here, doesn't it?
yeah, well, I mean he's almost threatening to throw the toys out of the cot a little bit here, and I think that maybe Trump is also surprised about maybe what's not happening as easily as he was hoping. I mean, he know he's fighting with Jay Powell at the Fed, wanting him to cut rates, but it seems like now Zelensky's backed out of their minerals deal and to come to the negotiating table. But now even maybe Putin is maybe not being playing ball the same way that he wants, and he's threatening sort of tariffs on Russian oil. And this tweet as well, it sort of came along here to say that, if Iran's not going to play ball, maybe bad things are going to happen to Iran. I don't know if you see the middle line here.
Yeah, and I covered this
So
in the Evil Elite series just about it really seems from saying that he was the peacetime president to really pushing hard. I don't know what is going on, but they seem determined to push us into World War Three, East versus West. And in that scenario, where do you want to have your money? US dollars, gold, maybe Bitcoin too. So and while there's all that uncertainty, that's definitely the backdrop, I think, for most investors. Yeah.
yeah, I mean, gold continues to rip and make all new time highs. Like, wouldn't be surprised if we saw $4,000 sometime. But eventually, like the Bitcoin trade's got to catch on, and like we see here as well, we've got congressmen now saying no, the US will be buying 1 million Bitcoin soon. And this has got an obscene amount of retweets and views. So this is like mainstream crypto news that
Mm.
maybe they are going to buy Bitcoin. So, I mean, this is all still like in flux. And I think, as we know, markets hate uncertainty, but it seems like we've got a lot of uncertainty right now.
Yeah, I think with one thing with Trump's cabinet, it's like watch what they do, not what they say, because they've said a lot of things now and sort of backflip. So awesome to see this sort of stuff getting out there. But yeah, we want to actually see that rubber hit the road and see some big Bitcoin buyers coming through.
Yeah. I mean, if we turn to just general market overview, again, just to reiterate, we're not in a crypto like problem scenario here. Like, there's nothing wrong per se with the crypto industry. This is just general macro overhang. And so, I mean, like, I'm starting to get to the point now where like things are beaten down pretty bad, and there's really no reason why anyone should be going and playing trench games with meme coins right now because there's so many great protocols that have just been savaged. And I mean, obviously, we can still go lower. I mean, people are talking about the levels of maybe like what 70K Bitcoin and $1,200 ETH are like still maybe on the cards, but you you probably got to look at your time horizons and think, okay, am I going to be hugely concerned if I buy now at 1800 versus 1400 on ETH? Um, we might move up here, and this might be the opportunity. Maybe it's not. So I'm starting to look at maybe nibbles again, like back into the market.
Yeah.
I still want to have cash on hand just to make sure in case we do nuke down again and have another leg down. But some of these protocols I highly respect, and I think will be around for the long term future, and they're pretty juicy pricing at the moment.
Yeah, and that's where we rely on Philip a lot now with all his data metrics. And he was very clear when he sold 20% right at the top. And then I think he said he's got 60% cash on the sidelines. So looking for him to redeploy it. His strategy and all those metrics seem to be really working well for members and everyone following him.
Yeah, he's a bit of a savant in that regard, isn't he?
Mm.
Well, to dive back into, I guess, the broader blockchain ecosystem, the Hyperliquid story that has happened over the last 2 weeks has been wild. So, for those that don't know, Hyperliquid is sort of eating lunch of a lot of these centralized exchanges a little bit with perpetuals trading. But there was an attack that took place on Hyperliquid last week where somebody has taken a spot position in a token called Jelly Jelly, which was only like a $20 million FTV token,
Yeah.
at the same time taken a $6 million short. So they're delta neutral. And now the price has started to collapse, meaning that the short, the price has started to run, meaning that the short is now toxic. And they've offloaded this short. But when the way that the Hyperliquid engine works is that Hyperliquid's now got to warehouse this. And so they've got this toxic big trade on a very illiquid token on their books. And then it just so happens that the same day Binance has decided to list this token, where when does Binance list $20 million FTV nothing coins? And so the price has started to rip, and then it got to the point where this short was like almost at the level of 20% of all of their reserves at Hyperliquid, and started to become really dangerous. And so they've had to interject here and sort of cut it off and sort of show some undecentralized behaviors to sort of save the protocol. But it does seem like it was a coordinated attack against Hyperliquid, seeing that the accounts were all funded by Binance and
Yes.
the listing still happens, at the same time. Just goes to show the games that are afoot right now between centralized players and, teams trying to build on chain.
And this was exactly the issue I highlighted when we first covered Hyperliquid, I think, in these episodes, was who's managing that risk? Is it all the traders? Is it their reserves? And as you say, because you can kind of have unlimited synthetic positions, they cut it off at 20%. But if it's all playing by, the rules of the code, then there's nothing to stop Binance, doing this again, maybe one or two more times. And then maybe they have wiped out 80% of their reserves and people go, well, that model doesn't work. So this is great, but always these new protocols, there's always risk. Yeah.
Yep. And that's why you just got to be careful that, like Luna, like for those who are around for the Terra Luna stuff, it's like everyone's like, this is the new paradigm of money. This is amazing. But until stuff has been battle tested and like attacked, you don't know. And I think that's why it gives so much more credence to things like ETH when you're talking about smart contract layers, because it has been nuked like multiple times.
Yes.
Yeah. So moving on, dYdX last week, which used to be one of the largest sort of perpetuals platforms, has decided to start distributing revenues to token holders. And for most of these DeFi platforms, Aave, Uniswap, the token is kind of irrelevant in some regards. It allows you to vote in their governance proposals, but it doesn't actually give you access to revenues, where they are starting to distribute that now on dYdX. So if this becomes a standard and all of the game theory between DeFi protocols catches on and they all have to start showing revenues, look out for things like Aave and Uniswap, these big DeFi platforms, Curve, because they make huge amounts in fees. And if they're going to start distributing those fees to token holders, up we go. So, these are hugely profitable protocols.
Yeah, and that can be that, snake that keeps eating itself, feeding on itself. If a few alts start to run, more people get into alts, they make more fees, and that's when you can get those parabolic rises. But interesting from dYdX, because again, remember, it was pretty controversial when they moved away from ETH to go to Cosmos, and
it was a bad move.
In hindsight, I was at the time. I remember thinking, like, what are they doing? There's just not the liquidity and money in there, and they've really struggled since. So I'd be interested to see what their sort of sentiment is now, if they're thinking about going more multi-chain or back to ETH, because it clearly hasn't really worked.
They were too early. They should have just waited another year. They could have just become an ETH L2 like what Uniswap has done. But I guess a lot of the ETH community saw it as like a treachery move, and so they jumped off, and everyone went to GMX, and now everyone's got the Hyperliquid. So people are fickle.
Yeah.
I guess just other news, Tornado Cash, which is the most famous mixer, is now no longer under sort of sanctions. And so this is interesting again, because now like this is again the Trump effect, like things which were getting highly regulated are now not getting regulated. So I guess a good move for freedom, but another interesting play that's sort of come out.
And ties in that previous article about, protocols now being happy to share some revenue. It's all this pro-crypto environment. Thorchain's been in the news about whether or not they should have stopped some of the maybe washed funds going through and all that type of thing. So, yeah, a lot of people have got that confidence now that, hey, if we're decentralized, we're not going to get in trouble for doing certain things that we definitely would have under the last administration. Yeah.
Yep. Walrus protocol, the Walrus mainnet. Now, this is a sort of a data storage layer on top of SUI. And so again, Sui's been beaten down in price. Well, I think current prices were at like $2. I think it got her up around 5 only a few months ago. Hugely funded protocol, a lot of adoption, early adoption. People were sort of thinking that this would sandwich Solana in between Ethereum and Sui. So again, I think there's a lot of building happening on Sui. But this is, yeah, a data layer that's existing on top of Sui. So something to watch here, Walrus Protocol. If Sui gets any sort of traction, this will too. But it goes to show they're trying to diversify their chain as well, not just to be gaming and that sort of hyper fast transactions, but actually having, real usability on the chain.
And big picture, if we do want to change the world from all this centralized control, as I've said over the years, we have to build a decentralized internet, and that requires decentralizing all the layers of the stack, of which data and storage, as well as transactions and compute, are all really important. So, good to see Sui going that direction too.
Yep. Again, just more games happening. So Poly Market, which has been traditionally one of the largest betting markets, the predictions market, is moving also to Solana. So they were on Polygon. I think Polygon's an interesting case right now. They've kind of like missed their window a bit. I think they're not necessarily the hot thing anymore where they used to be.
Yeah.
So yeah, they've now migrating, not leaving Polygon, but also being deployed on Solana, just trying to get more access over there. And this is a really interesting up and coming protocol too. So Hyperbridge is aiming. So Hyperbridge is a chain in of itself, but it's trying to mitigate that sort of centralized bridging that happens where most bridges are just like a multi-sig and they've got an actual attack vector point where these guys are trying to, I guess, turn all EVM chains interoperable with each other. So you don't just have to go through the ETH mainnet and then back out again, but then also connecting, they've got obviously like BNB chain here. I think they're going with AVAX as well. And all of these like Mantle and, Gnosis chain, all of these, this is the Uni chain. But it goes to show that, really trying to decentralize the EVM landscape and that you can turn your chain, if you've got one, take your protocol multi-chain in minutes by just deploying this Hyperbridge SDK, really sort of trying to tie them all together, making them all interoperable with each other. And eventually this has to happen for, the blockchain ecosystem to just be one layer of the internet and not have to like play around and how do I get my tokens here? I got a bridge. Is there going to be liquidity for that bridge token on the other side?
Yeah, I'll be
these
interested.
Guys do have a token.
Interested to see. Did you say they do have a token?
Yep, they got a bridge token. If it's not already out, it's just about to come out. It's called Bridge.
Yeah, interested to see how that goes once it's battle tested and hackers look for those vulnerabilities. But what's interesting here is it's almost gone full circle for ETH from the Polkadot framework that you've covered heaps and said you really love that tech. That when Gavin Wood was one of the founders of Ethereum, here we are almost full circle going back to that similar style. Yeah.
Ironically, this servicing the Ethereum ecosystem, but is actually built with the Polkadot tech stack.
There you go. There you go.
Yep. Another interesting one, the internet computer. I've mentioned it here several weeks ago about how they've got a very interesting paradigm, how they're trying to take the whole stack on chain, even the front end hosting of websites. Now, obviously, the actual chain itself, you got to ask the questions about its centralization. I mean, you do need some pretty heavy hardware to run the internet computer, and so it's mainly a data center play, which I mean isn't too dissimilar from Solana and many other high throughput chains. But they've got this caffeine AI protocol, which I flagged as pretty interesting in our internal teams. Like what they're trying to do here is that they're creating tools where anyone can write code, but because the AI writes code for you. So the self-writing internet, they're calling it. Yeah. And so this protocol will come out this year, caffeine.ai, and essentially will allow anyone to be a developer by being able to write self-writing code just by putting inputs and then code will deploy. So I'm watching this. This is interesting.
It's interesting on the backdrop, again, in the evil elites, I covered how Bill Gates came out and said we won't need humans or whatever for 90% of things. And you think about how far AI is going every month now with some of the new apps out that are voice to video in high definition. Mm-hmm. They don't quite have the sound component yet, but we are like only months away from a normal person being able to speak into a microphone and make a high definition movie about anything they want, as well as now make apps and all this stuff. It is just, it's crazy. I don't think the world is ready for it, to be honest. But anyway, let's keep an eye on it all.
It's mental. I mean, I'm in my late 30s, and I remember being in school when the first computers hit, and they were only green screen, like two different shades of green. Like, and this is just in my lifetime. Like, the acceleration point of tech here has been phenomenal, and with AI, it's only going to be faster. So I don't think we really understand exactly how crazy things are going to get in our lifetime.
Well, I think it has a fundamental, deep conversation about what does it mean to be like a human, and what are their day to day duties going to become, and universal basic income, and yeah, a big, big, wide conversation.
Raul Paul says it. You've got 5 years to make as much money as you can, because after that, we don't know what the employment market will look like.
Yes.
So,
Yeah.
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 Another one just to watch here. So this is another multi-chain layer trying to create fabric, Initia. So they're trying to, I guess, tie together things. The reason why I flagged this one is because they also have an airdrop. So you can go to airdrop.initia.xyz to see what you qualify for here. But interwoven roll-ups is what they're trying to, is their narrative. But again, a similar sort of play here, but I guess an airdrop for people who are maybe might be qualified depending on what chains you've used.
Yeah.
Um,
The ZK and roll up based change. Cool. Yeah.
Yep. Mega ETH also. So Mega ETH has been a highly publicized ETH L2, which has released its testnet. And traditionally, if you go and play around on these things and deploy some gas over there, then you do qualify for airdrops as well. So watch that space too. And yeah, just the games, I guess. Pump Fun has kind of been blamed for like crushing our bull market so far. Um,
Yes.
People have realized that this is not a healthy thing for our environment. And so Pump Fund is, I guess, pivoting by creating their own DEX, where traditionally they used Radium. And so in turn, Radium has decided to list their own Pump Fund feature. So
Yes.
the business partners are no longer in business together. They're sort of fighting each other. Um, but yeah, just goes to show just like these protocols will be hyper competitive with each other. And ultimately, that's only going to benefit us as the net user. But there's heaps going on. Like, I don't think we're in a bear market. I don't think we're going into like a multi-year bear market. I think we need macro conditions to change, and I think we definitely have another leg. Maybe the cycle has changed, is that it's not going to be an everything run, but there's some really good protocols, like top 20, top 30, top protocols that are very beaten down that will run. And so,
100%. And
yeah, keep
that's
your
where
eyes
our
open.
message has been the same for the past few years about having the majority of your wealth in the top tier assets where that institutional money is going to flow, because retail is kind of hurting at the moment at the supermarket and less likely to pump a heap of money into alts than they were in previous cycles. So that all ties in with our thesis too.
Yeah.
Beautiful. All right, mate. Well, great stuff. We'll catch up again next week, everyone, and talk to you soon, Michael. Cheers.